The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Still raining here in North Carolina. We're about to float away. A couple of my relatives' house down here are actually flooded. That's amazing. It has to stop raining for like 2 or 3 days down here straight. Let's get right into the dollar, folks. This is kind of the barometer of what's going on with a lot of commodities right now. Commodities repricing themselves. Dollar, we talked about yesterday. It's long-term players on the dollar not really giving any signs to relax this long trade. We're looking at 128.29 up top as targets. I'm showing our daily right now. We're going to get right into the S&Ps in a little bit because we had some thoughts on that yesterday morning relative to some of the information that we look at. We want to kind of analyze that and just kind of retrace a little bit, kind of re-gear for what's going forward here. Here's a dollar daily. Here's the 240. We got that 99.47 top of the box on the 240 here. Here's where we found support. We talked about yesterday at 98.88, or excuse me, day before 98.88. Here's the big number we talked about, that POC on the weekly. That may be a resting point, but as it's kind of gone up, touched it, and crowded it again on our weekly, I think 128.29 is going to be a foregone conclusion for this product. But remember, things don't move in a straight line. We can have some kind of ricochet moves back and forth. And make sure your stop's in relative to your appetite for risk. Let's take a look at the euro really quick. Obviously, this is related to the dollars over the 30% inverse relationship. Here's the weekly. We talked about it will be super cool to get a retracement back up into that 109 on a weekly. Euro's not looking back, folks. Seems like it's just, we've kind of, this is our daily. We kind of did that on the daily. We haven't had a weekly retracement. That doesn't have to happen. But when we closed below last week, below this 109 area, we had a close of 108.63. We kind of got back up into that 109 general area 2 days in a row. Couldn't get through it. That's that weekly unfair low. Remember, weekly takes precedence over daily, over 240 on down the line when it comes to these fair auctions. And it's looking sick, and that's going to help the dollar also head a little bit higher. Is it too late to short this? There's nothing to really hang on to down here as far as shorting it now. You want to, at least get some new inflection points. Even the 240 I'm looking at right now, profile appearing above price action. This is all reflected in the scanner when you go into the Forex section. And by the way, doing a webinar Thursday night, November 12th, 6 p.m. Get signed up on the homepage of TFNN. We're going to go through quite a bit. There's quite a few new features we're going to talk about in here. Some new information to hopefully help you guys get through the minefield every day and every month. But, is it time to take the euro short trade off that we've kind of been talking about literally since 135.52 back in summer of 2014? No, it's not. And we've had reasons to kind of take some weight off based on the dailies, which regulate the weeklies that we talk about all the time. But selling resistance and selling breakdowns has been the name of the game on this product. And we talked yesterday afternoon, actually on Tom's show, I believe, about this thing going to par ultimately, but that's not going to happen in a straight line. The yen, obviously loving this action right here. It's one of my favorite trades out there. And now you've got the yen support at 122.55, as we've talked about. We're going to keep cruising through the usual suspects here. Then we're going to get into the S&Ps. We're going to hit gold really quick. Going to hit a lot of stocks today, too, by the way. And did I overshoot gold? Here we go. On gold, we talked about a caller called in the other day, and we talked about the big support on gold was going to be around, if it was going to hold, around 1086, 1087. That's this is not the type of action you want to see on these major inflection points. 1125 was a big one. Then we've got 1086, 1087. You want to see price action get away from these areas, and that's not exactly, using a dragster to get the heck away from this inflection point 1086, 1087. I mean, this is kind of a consolidation, possibly the start of a possible consolidation around this inflection point to eventually break down again. And the good news is for the longs, you've got a new profile attempting to appear here, which is also predicated in the scanner. I'm gonna go into our futures section. You will see that right there on gold on that daily. There it is. And if you kind of get down to the heart of the matter and read the text, caution is shorts, targets may have been met, you can read that. The cool thing is too is by Thursday, we're going to be looking at pre-market calculations in our cells. We've always got it in our kind of display chart here. If you look at gold, well, gold's been pretty much sitting still. Let me just get this back up. Okay. Gold's been sitting still. I'm not going to reference that as an example, but we're going to have, you're going to be able to do pre-market filters relative to profiles, which you've never been able to do before in this version, especially the one that we're going over in the webinar. So that's what I would call good news, I hope. Okay, so what we're going to do next is we're just going to hit silver briefly. This is one that really we talked about waiting until we got down to even start thinking about any type of contra trade north off these lower inflection points. We're there now, 1445. We're sitting at 1443 right now. This thing doesn't have to bounce. Silver's been kind of a relative weakness type trade relative to gold, and I still feel that way, but you do have an opportunity. We talked about, patiently waiting until that area was approached. That was approached yesterday afternoon, and now we're sitting there. But again, the price action really, just like gold, you want to see this get away from these inflection points, and that's just not happening. That's not, not indicative of it's a possible turnaround situation. So be aware of that. What do you do with silver if you're a trader? You can take a shot here. The good news is you can orient stops around 1445 based on your appetite for risk. But again, here's the 240. It's just been kind of going to hell in a handbasket pretty quickly here. And I think you've got better longs out there. And you got to watch gold, because gold could, again, dollar rallying, commodities repricing themselves lower based on that dollar denominated situation. This may be a little bit of a situation until the dollar hits 128.29, and I think the dollar could actually go higher, and that would a lot of things would develop after that. We're going to kind of talk about that concept. Crude oil hanging in there. This is one we've talked about that might not be a bad time to start looking at this from the other angle, based on this divergence down here. Higher lows, lower lows on price action, higher lows on Navigator, and then we've got this profile sitting here. I'm willing to take shots on the long side with stops below 42.76, 43, and this dollar going straight north is kind of also clarifying this a little bit, that it wants to hang in there. So you got some things in your favor to start nibbling on crude oil, and that's the way I'm looking at that. Natural gas, I always get an email about this seemingly. Similar situation. Natural gas, you've got an orange bar appearing on the weekly. That means we could have a new profile appearing that's somewhat stallish, if nothing else, on the trend down. And you've also got a daily profile sitting here. So in my opinion, you could kind of play around with this with stops below 220, 2.238 south of there based on your appetite for risk. I'm stuttering this morning. It's still early. All right. So we've covered a lot of usual suspects. The grains, those I'm kind of going to reference wheat really quick because that was just a big problem yesterday on the close. All right, so we're sitting still here. We had a pretty big sell-off, and we talked about this 506 area on Tom's show a little bit. That's still the rocker arm. I'm not bullish at all on grains. I don't care how far they have fallen. I'm still going to try to keep turning and rinse the same way with stops above 506 in this instance, and immediate targets are going to be 488.5 on December wheat. And referencing corn, very similar situation here. I know we're down on support down here on December corn. I'm showing right now 360. I can't even believe I'm saying this. 364 a bushel. We can go lower, guys. We can go lower. I'm not buying that inflection point. Treasuries. Yeah. So, it's interesting how this thing hasn't sold off more, actually. Going to have to wait for some new signs to appear on treasuries to start even playing around with it. You're kind of in the abyss down here right now, and the only thing you've got to hang on to as we look at these 240s. As we look at these 240s, it's regulated the trade down since we broke down, especially recently around that 127.11 area. But short-term possible reversals are going to be above 126.10. But if you're a short-term trader, you've got to wait for it to clear that. Okay, I'm going to look at TLT. Somebody's asking about that while we're on the treasury situation here. Okay. So, again, do you take the short angle on treasuries and treasury related products, or do you kind of look for areas and try to find retracements back up into resistance areas, or do you look at this as buying opportunities? The rhetoric like Kevin Hinks talked about yesterday afternoon, he and I were doing Tom's show, or he came on as a guest, they're going to be so dovish. With their statements even after this, they're not going to rock the boat while this administration is still in force. To be honest with you, I have kind of wrestled with this for a while. I've been long-minded on treasuries for a long time. We definitely have broken some stride here. I'm not as excited as I was before about going long treasuries. We're going to talk about this 119.50 area on TLT when we come back. And I'm going to give my views about how I'm looking at treasuries from here forward. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Thanks for coming back. I was just reading something Jay said in the den. That is funny. It reminds me of myself. All right, so we want to talk about the S&Ps real quick here and the S&P futures. So let me pull this up and let me tell you what I'm thinking and what I was thinking yesterday. It's, everything's rosy yesterday morning. Weekly and daily breadth is positive. We talked about first line of support based on that, 2083, 2082, 2083. And, this looked a little heavy, but again, you got to kind of turn the wrench the same way. I mean, this thing's been kind of the buy the dipper scene for literally years, coming up on a decade, actually. But when things don't exactly work on the buy the dip support thing, this is a great example, me included. You have to have the stops in place. Now, was this market, due to have a little bit of a pullback? Yeah, it was. But, you could have said that here. You could have said it here. You could have said it here. You could have said it here. And finally, we had a little bit of a breakdown below. These are 240 profiles. These are not even daily. So let's go to the daily and let's talk about, what we said yesterday, which was, well, you got, more of a kind of a line in the sand, major support around 2063. So we hit 2062 yesterday as a low. Rally back a little bit this morning. We've gotten as high as 2078. I think we hit 2080 yesterday. So, is this going to hold? I've got to answer that question with looking at the scanner here, and I'm going to go into my daily. And this is the scene here. So our breadth charts are usually relatively accurate. I mean, when we have a big, increase in VIX, and a VIX that kind of stays a little more constant, we've got to, and there's when the VIX was low before I'm actually using my hand as if you can see my hand on your chart, which I know you can't. Don't know why I'm doing that. But as we're looking at this right on August 19th, in a low VIX environment, the higher time frames, the weeklies, dailies on our breadth situation, we're going to talk about this in the webinar because this is kind of pieces of the puzzle. You're able to utilize those a little bit more. So as you kind of go into a high VIX environment, you got to scale down to some of the lower term crossovers. All right. And that means, for day trader type guys, you've always got this 60 right in your back pocket. There's no question about that. And when we started turning yesterday morning, that was, a sign in itself. And then you're looking at possibly not buying those types of inflection points if we're below 2083, and that happens at the same time, then you're kind of passing on that. And you're maybe looking at the short side. But, my way of looking at, trading, I've kind of, gotten a little older, and I don't want as much as excitement as sitting in front of the screens and trading based off of looking at every tick. And to be honest with you, the computers have kind of taken over that scene. So I've kind of relaxed my outlook into kind of viewing specifically more longer term inflection points relative to profiles. So, I'm looking at the 240s, I'm looking at the dailies, I'm looking at the weeklies, and I'm also looking at this. And, we had kind of a mixed bag, obviously, with the crossover when we got down into that 2063 after I personally got stopped out at 2083, which was okay. Stop outs are a part of the game. Going on hunches and hanging on to those ideas around the hunches, when things are going against you, those are very, very dangerous. Try to make it mechanical, try to make it as mechanical as possible. We'll go over a little bit of that hopefully in the webinar when it comes to this. But as my long-term weekly was still positive, I'm still looking, even though we had a mixed bag, my preference is to keep looking, as buying support situations happen. Now, if and when this rolls over, the whole game's going to change for me because the internals are now starting to shift more so on the long term in the wrong direction from the buy the dipper scene. And that's kind of what happened back in, not kind of, it's exactly what happened on a couple of events, namely back in mid-August, all right, before we started really getting killed. And in mid-August, just to kind of give you some reference points here, that's when that happened. This is our daily scene. We broke below our bottom of our boxes there. And on the weekly, in a similar fashion, mid-August. So then it was okay to step on the short gas pedal. We're going to talk about this a little bit more as it relates to the S&Ps and how do we look forward and what do we, do moving forward today specifically. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Thanks for coming back to the show, guys. We were finishing up with the S&Ps, trying to get a heads up with, what's going to happen moving forward after we kind of just reviewed a little bit. So we got a mixed bag on the breadth situation. Pre-market, we're down a little bit. The good news is by the time I give this webinar on Thursday night at 6 p.m. on the 12th, which you guys can sign up for, I've said that about 87 times in the past 2 days. Pre-market calculations away from eSignal, we're getting the data through Interactive Data, which is eSignal's kind of separate data company, through an API link to populate this. It's a great feed, don't get me wrong, but to calculate some of these pre-market daily and weekly sales in 240s, we're just relying on them to kind of give us that information. So now we're going to calculate it on our own, which is how we do our display price, which is actually going to give a lot more credence to breadth pre-market, and also allow you to do some pre-market filters that hopefully will pick out some things that are happening relative to profiles early. So right now, though, the way we got it scheduled, breadth is negative on our daily, breadth is positive on our weekly, a little bit of a mixed bag. And what do you do with this? So we did our kind of little customary bounce off of the 2063 yesterday on the long term. We talked about that was the big kind of dig in point, relative to long-term breadth. Still trying to find those inflection points. We've got 2045, 2046 sitting down here as long as our breast stays positive too. So let me pull up our 240 so we kind of finish this little conversation. So pre-market looks like we're trading about 2070, 71 right now. We've come off of 63, 65 twice recently. In my opinion, if we, there's two sides of this equation because we've got a little bit of a mixed bag. All right. For guys, and when we have something like this, I don't have a lot of deep conviction trading the S&Ps. And a lot of times I will just sit on the sidelines, right? There's no harm in doing that. All right, let me say that again. It's okay to not be in the market all the time. So right now, with the kind of mixed signals that we do have, and where we're at in the fair auction on the daily and the 240 and the weekly for that matter, for guys who want to pick some battles on the long side, you've got this 63, 65 sitting down below on the S&Ps, and you've got some targets up top, 79, and actually even higher. All right, for guys who are wanting to short this, I don't see a lot of reasons to short this until we start getting back down below 63. But you're saying, well, God, we're trading 70 now. Why would I wait until we? Just for confirmation's sake, and any type rallies up into, and I'm going to give you a range, 80 to 86 is going to be the resistance area to short on the S&Ps. Again, we've got a mixed bag. There's not a lot of leverage here. We had a big move yesterday. We could just kind of spin around and chop up down here at the bottom of our profile on our daily, which would really bode not that great for longs, but we're going to have to wait and see how that happens. But remember, we kind of had a big move down yesterday. We're not really having a snapback right now, so that's kind of the landscape. How does that affect trading stocks today? And what you should do adjusting your positions. Let's just kind of go into the scanner. In situations like happened yesterday, you want to try to find situations that held in. So if you're looking for stocks that are kind of showing themselves, raising their hand, going, you know what, I'm not going along with this market pullback because I'm a strong stock. And if we kind of start rallying, head north again, then I'm going to be the first one in line to go north. That's kind of the situation that you're looking at. Now, you've also had a chance to look at stocks that showed themselves on the weak side. So let's just kind of take a look at that first. Let's look at below the box, and then I'm going to look at stocks that were trading. Let me just see this here. Let's see what I want to do. Let's just look at kind of the dual bad news stocks. These are the ones that are extremely weak, but what I want to do here, excuse me, so I want to kind of go into this land. These are our stocks that are, below the profiles on our weekly, have been that way, but are sitting in somewhat of a trading range and possibly on the edge of the cliff sitting here. There's a bottom. There's Seagate Technology, STX, F5 Networks, and also Fossil, which has been the eternal short, seemingly. FOSL. Let me pull that up. Here's Fossil. No mystery here. Got it. All right, so what's happening here is it's on the edge of the cliff again, and that definitely has clarified itself as a weak stock. But we're going to talk a little bit more about the scanner in a second, but we've got a caller. Don, are you there?
I am here, John. Thanks for taking my call.
Great. How are you today?
I'm pretty good. Glad that you're doing better.
Thank you. Thanks for saying that. That means a lot to me.
I'm calling about Palladium futures. Do you have that in your?
Palladium?
Yeah.
Do you have a symbol on that? Because I don't have it preset.
Yeah, it's PAZ5.
PAZ5.
I use palladium alloy in my business, and I'm about ready to order a couple ounces here, and I thought, well, this chart's looking kind of interesting. I don't know if it's today or tomorrow that I should do it.
Okay, well, let's try to clarify that. Are you in the jewelry business?
No, I'm in the dental. I
Okay.
do kind of bridge work for dentists.
Okay, great. Well, here's the weekly. I don't know if you're seeing my screen. And unfortunately, here's the daily. Unfortunately, I'm a big fan of the dollar going higher. And you're talking about today or tomorrow? Are you talking about today or next week or next month or what?
Actually, I need to order it within the next couple of days.
Okay. Well, we've had a good pullback here, which is great for you. We're sitting on this previous unfair low on the weekly at 601. Do I think the dollar is just going to do another spike today? That's possible, but we've had a good run. I think you've probably reached some decent lows here, and I don't know if it's sometimes on some of these trades it's like how much more juice can you get out of it? And I think we're going to head lower on palladium based on the dollar denominated situation, and gold and silver looking just ugly. But you're talking about a 2 or 3 day window. I think we've had a good move down here, and I don't think it's a bad idea to take advantage of it right now. I put a gun to my head. I think we're going to be lower in 2 to 3 days, but that's there's a chance it could rally too, Don. And
we're at the point 618 retracement right now from this recent low. And
right.
And I was also looking at something that I learned from Steve. We've got a tiny bit of a divergence on the RSI.
Okay.
Where the low on the 5th of this month, the RSI was actually lower than it was yesterday, which is another indicator that we've made a turn here.
I'm a big fan of divergences. Yeah.
Yeah. So there's two points right there, and I was just wondering if you had any levels there. I see your chart. I do see it.
Okay.
So you don't have any new levels coming up right now.
Under normal circumstances, Don, I would say there's not a lot of reasons to take the short trade off as it has broken down, below these daily and weekly levels. But considering the window that you're looking at, you could have kind of a noise factor just kind of bouncing around here, without a lot of direction and no inflection points to pay attention to. So I know palladium's expensive. I'd hate for you to get clipped for a couple of points while we're sitting on the lows here with it just kind of, staying in the long-term downtrend down, but yet just having a little noise here around the, that would,
what was that weekly level again?
Let me just point that out. The weekly unfair lows were basically around the same as the daily, same neighborhood when we broke down 646.48.
Okay.
But you've got this other unfair low. The thing that we don't talk about this a lot, but it's kind of like an exponential moving average. The profiles that are in the recent history still have some relevance moving forward. So this unfair low at 601.35. I mean, we're trading a little bit below there right now, but that's something to pay attention to also.
Okay. I'll take a shot. I'm already $100 to the good from last month, so.
I love it. I love it for you. I really love it for you.
Okay. Thanks a lot.
Yeah. Thanks, Don. Thanks for calling in. Okay. I hated to be so wishy-washy about the next 2 to 3 days, but there's a noise factor in all of these instruments, and Don's had a pretty good move here. It looks very, very heavy, like it could move lower. Here's our daily situation, but again, there's palladium's expensive. There's kind of a noise factor to this. Gold and silver look extremely, at least continuation type pattern-ish look to it. That just not a pretty scene for the dollar as it relates to that either, or not. It's a very pretty scene to be long the dollar, but commodities obviously going to reprice herself and put a gun to my head. Like I said, I think we're probably going to head lower in the next 2 or 3 days. But again, you could have that noise factor, and I've said that too many times already. So let's take a look at the euro. This thing is just continuing to crater here as we're speaking. Let's pull up our 60. There we go. There's our real-time prices. So, guys who are short, we didn't talk too much about this. Where's your near-term targets? You know what? There are no near-term targets right now because let me go back to something really cool that you can see here. Let's look at and this has all our pre-market stuff factored in. You see that red across the board there on the euro? And let me pull this up. There are really zero reasons to take this trade-off right now. You have no hints of any profiles attempting to appear on any time frame. Do you guys see that? Right across the board in this currency. We talked about, if you guys are long this trying to buy it on sale, you still may suffer some serious pain before you get any bounce. And I hope that you've been listening, that this has been one to sell resistance and sell breakdowns. Stay away from this on the long side, guys. I don't care what you hear on the TV. This is a lot of headwinds for this particular currency, fundamentally and technically now. Technically more so than anything else at this stage. Okay. Check something really quick here. Okay. All right. So we talked about on the scanner before Don called, like trying to find some stocks that, are showing their self early. We talked about finding some weak stocks here. We also talked about looking at some that were sitting on the edge of the cliff. And here, these were clarifying all the bottoms. I pulled up our neutrals a while ago looking at bottoms. But Fossil, again, not on sale. Things on their lows go lower. Can't rally. Sells off when the market sells off. F5 Network, similar situation. Let's take a look at CSX Corp. Okay, so what's happening here is we've been in a defined downtrend. We've got this 28.79 sitting here. Here's our daily. You got a pretty good rally yesterday, but rallied back up into this inflection point that seemingly is holding 27.73. And I know that's an ugly chart to look at shorting. I mean, God, why didn't, we've been talking about this as a short since the mid 30s, by the way, when it started turning. But, you got to keep turning the wrench the same way, find inflection points. There's resistance, there's breakdowns. When we're looking at a stock like this, when I use the scanner, also on a day like yesterday, I also want to look at, what got into the top scene here and couldn't get through it. Excuse me. We've got a lot of preset filters that are going to take advantage of historical bars that are, you guys are going to love that. Mike, just to answer your question really quick, we're going to, I don't think we have SPY in here. And I'll tell you why. Let me get through this first. Okay, so we had some stocks that were bearish that did rally back up into the top of their daily profile. Let's look at Murphy Oil. Let's look at Tyco first. So it's been in a downtrend 21 straight days below the profile, and we've actually been above our daily profiles on Tyco for 6. So let's just look at this. This is not the best short in the world out there. Hold on. No. Okay, so obviously Tyco been in a downtrend, kind of did a little sympathy bounce with the market lately. This is the situation on Tyco. Any type of breakdowns in the market, you obviously want to try to find weak stocks. Let's explore this a little farther and look a little bit deeper into Tyco when we come back from this break. And Mike will answer that question about the SPI also. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. The sort I had up on the scanner I didn't like. It was not appropriate for what I think market conditions are doing now. I think we're going to just kind of gyrate around a little bit here, but I wanted to find stocks that were kind of strong, but it started showing hints of breakdown. So on the weekly, still trading above the box, and we're going to have some really cool filters that take into consideration even more than you can filter for here. A little bit of a history, recent up moves, recent down moves, previous boxes, things like that are going to be canned in there. But I wanted to find stocks that were just kind of starting to change their tone on lower term time frames, starting to show some breakdowns. And let's just kind of go through a couple of those. So where is PepsiCo? Right there. All right. So let's look at PEP. That was on that sort. God dang it. Keep doing that. Let me redo my chart here. Okay, so here's PepsiCo. Stock that's been really, really strong. Profile appearing below. And as we pull up the scanner, I can go into PepsiCo and I can see that we're trading above profiles on the weekly significantly. above, actually. But we started breaking below these other profiles. Now, as I look at this is our weekly again. That profile appeared this Monday. A lot of times, those profiles will act like magnets if you're trading above, and especially if you've got some my fingers are kind of, let's just get this back. Okay, here we go. And as we start breaking down on the other time frames, they will act as magnets to pull that price back into those at least support areas. All right. So PepsiCo, you probably got better shorts out there, but the hint of traveling entirely through the fair auction recently and closing below that fair auction when the market was kind of continuing to hang in there, this thing started showing its hand early. Remember, we always try to find anomalies going on. And now you've got a little bit of an opportunity here. People could say, well, God, we're really sitting at support here on a big pullback in the market. And I understand that. But this daily close below the inflection point and not still clarifying bottom means a lot to me. And now that can be used as resistance. 99.23, a little bit of a selling point. This is a little bit more of a daring trade, if you will. But coming back down 3 or 4 points below, that's a 4% move in your favor. If we get this kind of move that we're talking about back down into 95, 97, would be a decent trading opportunity in my mind. But again, this is a little bit more of a daring trade. The good news is you know where you can put stops oriented above 99.23, a little bit north of there based on your appetite for risk. I'd actually put it above, maybe right above 100 on this type of trade. So let's go back into the scanner. Again, that was a little bit more of a daring trade situation. Let's look at Estee Lauder, EL. Some reason I'm thinking of my mother and sister right now. Mother and sisters. God, mothers and sister. That's really good. All right. Again, this is a strong stock. I think you've got better shorts out there, even though we have started breaking down on Estee Lauder. There might be a little bit of a trading opportunity in the same situation. Not a lot of juice to squeeze out of this one, so we're going to pass on it. ADP. Let's take a look at this one. ADP. Got 5 seconds here. And our chart's coming up. We're going to have to pick this up tomorrow, guys. Stay tuned. Larry's next. You'll thoroughly enjoy him. And I'll be back tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.